And earlier today, the free markets ETF announced it will be dual listing on NYSE Texas. The fund, which trades under the ticker symbol FMKT, will offer trading on NYSE Texas in addition to NYSE ARCA. Joining me now is Hal Lambert, co-portfolio manager for the free markets ETF. Hal, welcome to the show.
Yeah, great to be on.
So why is NYSE Texas a natural fit for the free markets ETF growth?
Well, look, the NYSE has been a great partner, and it's a natural fit because Texas is all about deregulation and having less regulation. It opens up, the dual listing opens up the ability to have more liquidity. It also opens and expands, the interest in Texas itself and investors in Texas. So we're really excited to be a part of it. And again, deregulation is a natural fit for that state.
And I understand, Hal, that your fund is designed to capitalize on economic tailwinds created by that deregulation. Can you take our viewers through the type of exposure that this is giving your investors?
Yeah, exactly. This is going to look like nothing else that people are invested in. So when you look at what's happening with the deregulation movement that the Trump administration and this administration is pushing forward, as well as the companies themselves, you're looking at things like electric power. Electric power is a much needed aspect of what we're going to do going forward with AI, right? With the data centers. When you deregulate that industry and allow more construction, you allow all forms of energy without regulating the permitting process as stringently as they have in the past. Those kind of things open up the ability to grow faster. If you look at things like even the FAA, and you look at a company like, say, a DoorDash, right? You think, well, how would DoorDash benefit from deregulation? They're looking at doing, last mile efforts with autonomous vehicles, with drones. That stuff is being deregulated and enabled to grow faster. So this is a fit for people that look at regulation and how much it costs the economy. In the last year of the Biden administration, you're looking at about $1 trillion of new regulation. And when you pull that cost out, you're looking at a lot of corporate profits that can benefit from deregulation.
And do you think this deregulation can broaden out momentum across the entire stock market?
Absolutely, because regulation is a fact of life for most companies, whether they're private or they're small cap or they're large cap or mid cap. By the way, our fund is across all spectrums. You can be small, mid, or large. We're looking at things like financials, obviously. The banks are highly regulated. There's a lot of excess costs in there. Exchanges are highly regulated. There's a lot of costs in there. So when you look at that, we're in Robinhood as an example. Those types of costs are going to be squeezed out because we're going to have deregulation, and that's going to increase profits, and that's what it's about. And so we're looking for companies that are going to have increased profits with deregulation.
Hal, do you foresee any short-term volatility in the market, or do you think things are going to stay stable?
Well, look, the volatility could pick up. We're in that season. Right now we're kind of going into the late summer. September, October is typically pretty volatile for the markets historically. But I'm pretty bullish overall because, again, everyone's talking about tariffs as an extra cost, but deregulation is coming out. The cost of that is coming out. And those are literally trillions of dollars of costs over the next few years. So I'm pretty bullish about where things are in the markets, even though we're at elevated levels. I think with the cost reductions that are coming, you're going to see this market. And by the way, the Fed rate cuts that I think are coming next year, possibly as soon as September, I think we're going to see up to 200 basis points of cuts over the next year. That's going to be a tailwind too for this market. So I'm bullish.
Hal, we have less than a minute. Anything investors should be following?
Well, FMKT would be one, but I think they really do need to be following what's going to happen with the new Fed, who the new Fed chair is going to be, and because that's going to be important. Trump's looking for candidates right now, and I think we're going to get a good indication of where things are headed. But again, he's going to look for somebody that's going to be interested in cutting rates. And I think that's going to be a big tailwind. I would watch the financials. I think the financials are set to really benefit from both the Fed cuts as well as deregulation, especially mid-cap banks. You're going to see merger activity pick up with this as well. Deregulation is going to enable more mergers. I would definitely be looking for companies that could be acquired in that merger activity. There's going to be a lot of activity over the next year in the markets. I think it's going to be an exciting time.
Thank you, Hal Lambert, co-portfolio manager for the Free Markets ETF.